Awesome. Yeah. Thanks, everybody. This is going to be a fantastic session in this allotted time. I'm going to show you such a high probability setup. It is easy to learn, to find them. And, I always like to talk about this little 8-year-old Johnny from, elementary school. I can seriously teach him our technical approach and this pattern in particular in this amount of time. So you're going to love it. At Master Trader, we are technical based traders. So that means we start with a compelling pattern. I say no setup, no action. I don't even look anymore. And that's on whatever time frame that you are trading. It's the same approach, whether you trade a daily, weekly, 15-minute chart, and then we overlay these other concepts that make up our entire method, the objective being we want a high probability setup. Candlestick analysis with a price void. Price void means, you'll see in this W pattern, that there is room for it to move higher. There's insignificant resistance to the left for longs. Then we take that pattern, whatever it is, I'll show you a couple of them here on the next slide, and then we say, okay, well, where is this pattern in connection with the overall trend? What about multiple time frame analysis? Does that support the time frame that you're trading? Is the pattern on support or resistance? We just finished our MT Live that we do on YouTube every Wednesday. Today's session was on relative strength weakness analysis. You can go to YouTube, check it out. And so we want to trade something that is like the best of the pack in the strong sector, or again, everything I'm talking about applies equally to the reverse, the short side, which would be an M top. Volume and moving average is secondary to us. I don't even need them on my charts. We are objective price pattern traders, but we throw it on there and just to help speed up the analysis. We say, what are the broader markets doing? And these two should really be up top. Proper position of money management, trader psychology. You have to have a proper trading plan, which is created as a result of having an objective systematic method that you have learned. And then you have to have the trader psychology and risk management to follow your trading plan. And that's easier said than done. Once you have the objective information, then, from that point forward, it's really what I just use one word and call seasoning. Seasoning. I've been at this full time, 24 years. I have thousands and thousands of trades under my belt. So I'm at the unconscious competence level. Once you take a seminar, you are at the conscious competence level, which means, okay, you know what you're doing, but you don't have the experience that you can do it flawlessly. All 9 of these are bullish setups. We call them bullish money patterns. Again, it doesn't matter what time frame you're on. It doesn't matter what the underlying is. This can be a stock, a future, an ETF, a cryptocurrency. Doesn't matter the time frame. This is our starting point. And if you cannot tell me what the bullish setup is on the time frame that you're trading, then that's the end of the analysis. There's nothing to do. So you move on. But if you do have one of these, and we have many more, then we go through these other concepts. So today I'm going to be focused on W bottom. You're going to love it. A couple of miscellaneous words about it. It's a momentum move down. So people are expecting a continuation of that move down, which is in this visual here is lower lows, lower highs. And then something happens where it fails to make this lower low, or I'll show you some examples in a moment here. These can happen in any trend, up, down, sideways, any trend. I say they have symmetry in shape and time. What does that mean? Well, go back to elementary school, and when you're learning the alphabet and you have this fluid move down, I want less than a third retracement into this fluid move down. And on the next page, I'm going to show you different pictures of the reversal. There is no trade until I get this reversal. And reversals happen in different ways. Many bars. These are just pictures of different types of reversals, but the message is the same. It went down and it went back up, and we need the price void, the pattern, etc. And so this one, it went down and went up in this W symmetry fashion. Here we go. These are three different pictures of M tops and bottoms. Let's focus on the W bottoms because, I don't know, most people like to have a long bias. So momentum move down. Counter trend retracement, less than a third. Roughly. You can't be, exact about it. And then here is the key. When it comes back, you want to see how it reverses. Because remember, I already said that the bears are expecting a new low. In NL shock means it made a new low, NL, and then it closed with a potent reversal bar. So that is shocking the bears who have to cover. And then there's people like me and my traders who see this as a potent new long. This one is, these are just different derivations. So this one went up deep into resistance and I have a nice potent reversal. This one started with a big WRB and it's a retest of that. So that these are just three. They can happen in hundreds of ways, but once you understand how to objectively read price action, you will know when to strike. You'll know because the price action's telling you I got my reversal. So many people in the industry call any retest of a prior low a W bottom. We do not. Our double bottoms is this. Momentum move down, third retracement, retest, okay? This is a climactic buy setup on major support. This is not a W bottom. So we still traded it, but look how clean my daily charts are. We have color-coded candlesticks, volume. We use 3 moving averages, the blue 20, 50, 200, and it just, as I said, helps speed up the analysis. This is a price void, momentum move down with a nice range expansion bottoming tail on major support. So we bought this and just managed in between, but it's not a W. This is a W. Weekly chart. Momentum move down, less than a third up. So now I am watching. Here's my textbook. Enter on the reversal when you are confident. Now, of course, when you're confident, trades can go against you the second you enter, but I'm going to get on all these examples, I'm going to show you that when do I feel confident that this turn's going to hold? Well, this is a wide range engulfing bar. There would have been nothing wrong with taking a half position there, the stop under the low. It retraced against you, but remember your stop's under here. Now that I have a red bar and a green bar that held support again, you could then add over the high of this red bar, because then it would be a red bar ignored with my price void. And we also want this retracement to be from a V top. Why? Because then with this big bottoming pattern in this price void, we are expecting it to go through this major resistance. If you had like 10 or 20 overlapping bars up here, That's not a good W pattern. We want a V up here, V retracement. All right, let's just now go to as many examples as we can. It looks like we have 20 minutes left. Momentum move down. I'm in an area of support. Counter trend retracement. So here I ask you, I want you to ask yourself, where do I feel confident of entering this? And I'll answer first because I got the mic. Would I feel confident buying over the high of this narrow range bar? Not with much confidence, because that is not a potent turn. But this could be a good one to say, you know what? Take 20% position and let's monitor it. And now that I have a wide range bar, you could have been adding throughout the day, but I'm getting confidence as the bullishness is continuing. This is a close. We keep every one of our open and closed trades in the members area for subscribers. We have 3 separate advisory letters. The advisory letter here, we trade stocks and options on a swing basis. So this one we bought, we bought a half lot of stock and then we added here. See, I did exactly what I just said. We give the technical setup, a wide range bar from a large W bottom, bear sandwich on support, and the 20 MA on the weekly. What the heck does that mean, Dan? Well, do you remember on the first slide when I showed you our technical approach, multiple time frame alignment is one of our criteria. I'm not showing you the weekly chart, but I'm telling you here in words for subscribers, this goes out by telegram. They're in live, anywhere you are in the world, you get a telegram alert. And so this is a bearish reversal on support on the weekly, sector strong, sell third here for a quick 28% return. We manage the rest of it, 38% return on a little swing trade. So my partner Greg has this saying, it's the same but different. And he's right. We teach the skills to interpret price action. They're not gonna set up identically. So I can go through 10 examples, or I can go through 100. They're just more examples. Momentum move down. My 200 period moving average is here, which is just we call subjective, but it's a reference point of institutional buying, which corresponded with this breakout. Momentum move up. This red bar suggested lower prices. It gapped under the red bar and closed, we just eyeball things, closed about 80% into that bar. The next bar, it gapped up, bottoming tail, closed green over the high of these 2 bars. That is my entry. This one, we did what's called an income trade, where we just say, hey, that's a short-term bottom, that's a short-term top. And we sell either naked options or credit spreads, because that takes less buying power and less risk in the event of an adverse gap against you. So this one, I make this silly analogy to Halloween movies, where October's coming up, and you've seen Halloween Part 84. The music plays, the guy's in the kitchen with a knife in his hand. You know what's going to happen next. So this is my entry. It does not mean it can't gap down to 10 tomorrow on adverse news. So once I see this bottom for an income trade, we're going to sell a put spread under support. You can do it naked, or you can do a spread, like I said, for the advantages, and you keep the money as long as it stays above that short strike at expiration. Multiple time frame analysis. Is this a W on the daily chart? Absolutely not. It's a bullish 1, 2, 3 continuation, which was one of the 9 pictures that I showed you earlier of bullish setups. But I'm showing you multiple time frame alignment The monthly was a W bottom. Now, granted, I'm not trading the monthly chart, I'm trading the daily, but I'm showing you how all time frames, this monthly W, you can see the same W on the weekly, just with expanded data, because I have 4 bars for one monthly bar, right? Common sense. So here's my momentum move. I actually had a mini W bottom here. See this? Higher low, went up, and this makes it even better. This bottoming tail took out these prior lows. Do you remember that slide I showed you that said new low shock? That's what this is. So do you remember the question I keep asking you to ask yourself? Where do I feel confident to get on board this thing on this reversal? Well, if you're trading the weekly chart, then it went up, red bar is indecision, followed by a bullish engulfing bar. There, I'm confident. There, and I'm just eyeballing this, what, 25.66? So that would have corresponded on the daily chart of right here. So we actually entered a little bit higher based on this daily 1, 2, 3. Textbook here, W bottom on dunking. I don't have my other charts up. I think dunking's around $40 now, DraftKings, and it all started from this pattern. W bottom on the weekly. Daily chart. Here's my little bear sandwich continuation again. That is our no-brainer entry. Stop under this prior pivot. If you're managing on the daily chart versus managing on the weekly chart, you will simply just have different trail methodology. And so look, I gave this as a quarter long. So here's my daily chart. The other ones were weekly and monthly. And we have a wide range breakout with a 1, 2, 3. So all 3 time frames here are in amazing alignment. You know what would even make this trade even better? And I'm not being sarcastic, I'm being serious. Is if when we entered, it either got a downgrade or it had any other kind of bearish news. Now, I can't interact with you all like in my live trading room, but just ask yourself, if the pattern is telling me on all time frames you're bullish, which means demand is greater than supply, and it can't go down on bearish news, I have more confidence that that pattern is going to work out. This is a very interesting chart that I'm going to explain to you right now. So this is for day trading purposes. Here is my W bottom, correct? Momentum move, less than a third, and a retest. So now this is a bottoming tail retest of a double bottom. This is the spiders intraday, and this is the market clock. So 1430 was our 230 reversal period. The broader markets broke down, made a new low on the day, and closed with a range expansion bar. That would have been the time you could either trade the spiders for a scalp or buy this over the high of this bar. Because as long as, I call it the mothership, the 4 index ETFs, as long as I'm now bullish on the mothership for day trade into the close, I'm looking for bullish setups. So that's just showing how we used the spiders. I can show you so many examples, but I will ask you one question. Where to enter? Where do you have the confidence? Would it be over the high of this bar right here? To me, no, because I got all these other overlapping bars right here. What about on the gap up, and then it takes out a 30-minute high? Now I have the confidence. So buy 30-minute high, 10-minute high, whatever. I would have to look at an intraday chart on that particular day. It cleared this red bar. So now collectively, I have the confidence of the turn. You always position size for your stop loss based on your trading plan, max loss per trade. Monthly, here's my W, here's my W, but I'm not trading the monthly. Weekly, wide range igniting breakout. You could have bought here actually, but you see this 1, 2, 3 on the monthly? That was my weekly buy setup over here. Okay, so I'm showing you these W's in different context on purpose, obviously. The stock's not going down anymore. Can you all see that? It doesn't want to go below 8. It was at 24. There's my momentum move. Here's my counter trend, less than a third. Where am I confident? Would I buy it over the high of this again, narrow range bar? No, because I don't have the confidence that it's going to hold. Would I do it over the high of this bar now? Yes, I would. Because that's a range expansion. Buy over the high of this, stop under here, manage in between. Yeah, I'm talking a little fast here because of the tech problems. Let's read what I typed over here. What trend is this stock in? Answer is down. Lower pivot lows, lower pivot highs. What has to happen to change the trend to sideways? Answer, fail to make a lower pivot low, lower pivot high. So if this becomes a new pivot low and starts to move up, then I've broken the back of the downtrend and I'm now in a sideways trend. What do I have to do for it to become an uptrend? Well, 2 or more higher pivot highs, higher pivot lows. So this W pattern, you all, is a fabulous place to enter on a transitional phase after momentum moved down, retest, which means the bulls who bought over here are stepping up again. I got a price void, and depending on how high it goes, then you're high-fiving yourself saying, look, this is where I bought. I didn't buy here at $70 after it was in a new uptrend. I bought here at $25. W, right out of kindergarten. Momentum move, up, down. Same question. Where would I feel comfortable? On this particular pattern, it has to get over this red bar, or I don't have the confidence. You see? Over this red bar, stop under the low, off to the races. This is a new setup right here. This is a bullish 1, 2, 3 continuation with a price void. Intraday. I actually remember this stock. We purposely don't put symbols on here because it doesn't matter. It doesn't matter. But I remember this one because it's just because I have a good memory. This was Facebook in the days. It had a 13% sell-off here. I don't know if the FTC was coming after them or whatever the case. 13% sell-off, nasty gap, consolidating at the low, gap down, momentum move down, 2 bottoming tails, went up, retest. Same question I want you to ask yourself. Where do you feel confident that this turn is going to hold? My answer would be a half lot over this topping tail. Half lot, because topping tail is good, but topping tail got negated. Once this bar closes like this with a bullish engulfing bar, range expansion, now I have 98% confidence. Why not 100, Dan? Well, because I don't have 100% confidence in any pattern. Because I'm, realistic enough to know that any pattern can fail. But we are odds traders looking for high probability setups, calculate position size, manage in between, and that's what trading is all about. If you work at Nordstrom, you're the manager, your job is to exchange merchandise of clothing. As a trader or an investor, our job is to exchange merchandise in the equity markets. So I don't care that this is meta. I care about a pattern. Big old bottoming pattern. Look at that. Big old bottoming pattern. Now, I personally never enter a trade based on a monthly pattern. I use these to say, look, this back in 19, 20, 21, that this is a multi-month bottoming pattern. And this monthly bar is telling me that the daily and weekly chart ripped higher. Ripped. Shit, I'm getting internet blips here again. But good thing we're almost done. So this is telling me this is a long-term hold. But then I drop down to the smaller time frames for my entry and management. These are old here too. This is post-COVID, when things just friggin' collapsed, but we were finding Climos and W's all over the place after COVID. Momentum moved down. Now, if you were to trade the first reversal, that's what we call a climactic buy setup. And yes, quality ones are tradable, but that's not my subject today. A W retest has substantially higher odds, just inherent in the name, because it's a bullish retest. Okay, so these all have different qualities. This one is the sloppiest, I'd say, because you got this ugly 180 and it already triggered and it made a new low where these others two didn't. So I'd say RCL and hey, folks, this has just kind of dawned on me. I just saw RCL before I joined you today. I think it was at $197 all-time high. Guess what? It all started from this W reversal. I'm saying that when, again, 98% accuracy. I don't think it went under $20. But just for trivia and education, go back and look at it when you're done with today's session. So these patterns work. They're amazing. Now, I guess I'm negligence, not the word, but I use tight management, so I don't get. I'm not in this at $197. That's for darn sure. I take my swing profits. I look for a new setup. Swing profit, new setup. But could you manage it based on the bigger time frame and follow our trade management rules and stay in it? 100%. But that has to be your personality to allow for retracements. Same period, Jets got slammed, W bottom on the sector ETF, W bottom here on UAL. Same discussion. Where do you feel confident? My answer is I don't know yet. I need more information on both these charts because this could keep just drifting lower. But this one, at least UAL, is showing a little relative strength to the sector because it's forming it appears to be a higher low. All right, we're almost done here. This is not a true W, so I call it just a bullish retest at the 50 because it didn't move up the less than a third, but it's a 180 reversal retest of this. This one was Caesar, so we gave two trades. We bought the stock on this breakout, and we also did a put spread. So these are just what I show about selling credit spreads on the bullish side. You find your turn, and this is what we're talking about today. You find your W pattern, short a put under support, and you can do it naked. Or if you want to do a spread, buy a further out of the money one. The credit is your potential maximum gain, credit received. And we love selling 0 DTE put spreads. So, or this one was 1 DTE. Here's my W bottom on the 15-minute spiders. And we did a put spread on this. All right, so I just went through a ton of information. I hope I met my promise that you would still learn a lot in the little abbreviated session. Now this link right here, mastertrader.com/success, it's going to bring you to this page where it's a recent free video series on trading stocks and options that we sent to our subscribers. Go here, you don't have to buy a thing. Watch these 5 videos for free. I promise you, you will thank yourself. It's amazing information, but this is the amazing package that my partner Greg Capra put together. He has this swing trading course, which is $1,000 just in and of itself. We're going to throw in our top-down approach to the market, lifetime coaching, 3 months of the advisory swing and options trader, his scans on TC2000, another free ebook here, and you can see the discount here. So check it out, but you know, I'm not the heavy salesman type. I like to show you free stuff. Come to Master Trader Live on YouTube every Wednesday. We have amazing free education we've been giving for 7 years now. Greg and I on there. We have free chart of the week, all kinds of free stuff, including these videos. Check it out. Any questions, email me, dan@mastertrader.com. Thanks for your attention. Hope you learned a lot, and have a great rest of the afternoon. Thanks, Dave.